Now that we've set the stage for why the cryptocurrency clarity bill is so important, let's dive deeper into the political environment surrounding it. Understanding this is crucial because, as with any major legislation, timing and political dynamics can influence not only when the bill becomes law, but also how markets react once it does. Right now, the sense from people close to the process is that passing the clarity bill is almost a done deal. It's not a question of if anymore, it's a question of when. And when it comes to crypto, timing matters. Investors want to know if this is going to happen before major elections or after, because that can shift sentiment and short-term price movements, even if the long-term impact remains powerful. A lot of people are concerned about whether the bill will pass before the midterms. The worry here is political. If the bill passes before elections, one party might take credit for a significant legislative win in the crypto space. Historically, Republicans have been more pro-crypto, so some fear that Democrats might delay passage to avoid giving a boost to their opponents. While this might sound like politics getting in the way of finance, it's actually an important factor for understanding market expectations. Traders and institutional investors pay attention to these timing issues because it can influence short-term volatility. That being said, even if the bill passes after the midterms, the long-term impact won't change. The Clarity Bill, once signed into law, provides a clear legal framework for cryptocurrencies like XRP. This is the first time the U.S. will have a formalized understanding of how certain digital assets should be treated in terms of compliance and regulation. Financial institutions that have been hesitant to adopt or announce projects in blockchain technology are suddenly going to be able to move forward without fearing regulatory backlash. This is the real game-changer. The timing of the bill's passage may create temporary speculation, but the fundamental shift in market structure is what will drive the long-term value and adoption. It's also worth noting that the discussions around the bill are not only political, but also involve different stakeholders like the crypto lobby and traditional banking lobby. Both groups have strong opinions about what should or shouldn't be included in the legislation. The crypto lobby pushes for clarity that enables innovation, adoption, and integration of digital assets into the financial system. Banks and other financial institutions, on the other hand, want rules that reduce risk and ensure compliance. These discussions might create small delays, but they also demonstrate that the final law is likely to be well considered, striking a balance between innovation and regulatory oversight. This balance is exactly what large institutions need before they publicly announce any crypto partnerships or new products. From a market perspective, the Clarity Bill passing may not trigger an instant price spike in XRP. Many people expect fireworks on the day of signing, but history shows that large-scale financial moves take time. For example, when XRP was officially cleared in the Ripple SEC case, the price didn't immediately skyrocket. Most institutions needed to evaluate what the outcome meant for their risk management reporting and strategy before acting. They had to get internal approvals, discuss with their boards, and analyze how to integrate XRP into their system safely. The same pattern is likely to happen with the Clarity Bill. The initial announcement may barely move the market, but it sets the stage for a sustained period of adoption and growth. Another important factor is expectations. The crypto market is highly influenced by hype and sentiment. But the Clarity Bill is more about real-world utility than short-term excitement. Investors who understand the deeper impact recognize that this bill enables partnerships, product launches, and integrations that have been delayed for years due to regulatory uncertainty. Once these projects are announced publicly, the market may start to realize the scale of adoption that has been quietly building behind the scenes. This is what separates XRP from other cryptocurrencies that rely heavily on retail trading or speculation. It's also worth considering that the passage of the Clarity Bill is going to create confidence across the entire cryptocurrency ecosystem. When major banks and financial institutions publicly announce that they are using XRP or integrating blockchain technology, It signals to the market that digital assets are not just speculative tools, but are becoming part of the global financial infrastructure. The Clarity Bill removes legal uncertainty and reduces perceived risk. It allows organizations to be proactive rather than cautious. This is the kind of momentum that doesn't happen overnight, but builds steadily as institutions start taking real, measurable actions in the market. Finally, let's talk about why this is especially important for XRP. Ripple has spent over a decade building relationships with some of the largest financial institutions in the world. These partnerships have been largely under the radar because companies couldn't risk making them public without regulatory clarity. Once the Clarity Bill passes, these partnerships can finally be revealed. This will demonstrate that XRP is not just a token for trading on exchanges, but a utility-focused asset that is actively used in cross-border payments, liquidity solutions, and regulated financial products. That is the true catalyst that could redefine XRP's role in the crypto market. In short, understanding the political and institutional environment is key to predicting what happens next. The Clarity Bill isn't just legislation, it's a green light for large-scale adoption. Timing may influence short-term speculation, but the structural impact is what will truly drive XRP's long-term growth. Once institutions are free to act publicly, the market will start to see a chain reaction of announcements, product launches, and partnerships that were impossible before. This is why paying attention to the political and institutional timing is critical for anyone serious about crypto investing. A lot of people assume that once a major legal victory or regulatory milestone happens, the price of a cryptocurrency should immediately explode. It sounds logical on the surface. If something positive happens, the market should react instantly. But in reality, markets, especially when institutional money is involved, rarely work that way. Large financial institutions do not move billions of dollars overnight simply because a headline appears. They move slowly, strategically, and only after they fully understand the legal, financial, and operational risks involved. A perfect example of this happened when XRP finally received one of its biggest legal victories during the Ripple versus SEC case. For years, the entire XRP community was waiting for that moment. The argument was simple. If XRP is declared not to be a security, the biggest cloud hanging over the asset disappears and institutions can finally step in. When the decision finally came, and it became clear that XRP was not being treated as a traditional security in the way the SEC had argued, many people expected the price to explode immediately, but that didn't happen. The market reaction was surprisingly quiet at first, and this confused a lot of investors who had been following the case very closely. The reason for that reaction is actually very simple. The people who were watching the case every single day already understood what the ruling meant. The XRP community had analyzed every legal argument, every filing, and every development for years. But the majority of the financial world was not paying attention that closely. Institutional investors, banks, and large financial firms suddenly had to go back to their internal teams and ask important questions. Their risk departments had to study the ruling. Their legal teams had to review the implications. Investment committees had to decide whether exposure to XRP now made sense. These things take time, because large organizations cannot make decisions quickly without proper analysis and approval from multiple departments. This is exactly the same type of process that will likely happen once the Cryptocurrency Clarity Bill becomes law. Many retail investors are expecting a giant green candle the moment the bill is signed. They imagine the market instantly realizing that XRP now has full regulatory clarity and rushing in all at once. But the reality will probably look very different. The market may already start moving gradually before the bill is passed, because investors are anticipating the event. By the time the bill officially becomes law, a large portion of that expectation may already be reflected in the price. That's what people mean when they say something is priced in. Instead of one massive explosive move on the exact day of the announcement, the more realistic scenario is a slow build-up followed by a much larger move later. After the Clarity Bill passes, institutions will begin the same internal process we talked about earlier. They will go back to their legal teams, risk departments, and boards of directors and ask whether it is now safe to move forward with public partnerships, integrations, and investment strategies involving blockchain technology and digital assets like XRP. Once those approvals start happening, that is when the market will begin to see real momentum. Another important factor to understand is that regulatory clarity doesn't just affect investors. It affects companies, banks, and financial infrastructure providers that want to build products using blockchain technology. For years, many of these organizations have been experimenting with blockchain behind the scenes. They have run pilot programs, tested payment solutions, and explored how digital assets could improve efficiency in cross-border transactions. But without clear rules. They have been extremely cautious about making these experiments public. Announcing a partnership with a blockchain company while regulation is uncertain could expose them to legal risks or investor concerns. Once clarity exists, that hesitation begins to disappear. Suddenly, companies can openly talk about the technology they have been working on. They can release products, announce collaborations, and show investors that they are embracing the next generation of financial technology. This is where XRP becomes particularly interesting. Ripple has spent years building infrastructure designed for financial institutions, not just retail traders. Its focus has always been on cross-border payments, liquidity solutions, and real-world financial applications. These are exactly the kinds of use cases that become much easier to scale once regulation becomes clear. So instead of thinking about the Clarity Bill as a short-term price trigger, it's better to think of it as the removal of a major barrier that has been holding back adoption. Imagine a highway that has been partially blocked for years. Cars can still move slowly, but traffic is limited because everyone is cautious. The moment the barrier is removed, traffic doesn't instantly become full speed, but gradually more and more vehicles start using the road. Eventually, the flow becomes massive. That's a good way to visualize what regulatory clarity could do for XRP and the broader crypto market. Over time, as more institutions complete their internal reviews and begin launching real products, the narrative around XRP could shift dramatically. Instead of being seen primarily as a speculative digital asset, it could begin to be viewed as infrastructure for the future of finance. And once markets start recognizing that kind of real-world utility, the price movements can become much more significant and sustainable. The key point here is patience. Major structural changes in finance take months or even years to fully play out, but when they do, the impact can be enormous. Because one of the biggest misunderstandings in the crypto market today is that people believe nothing has been happening behind the scenes with XRP over the last decade. And the reality is actually the opposite. A huge amount of development, testing, and partnership building has been happening quietly for years. The only reason most people don't know about it is because companies and financial institutions had a very strong incentive to keep these relationships private until regulatory clarity existed. Without clear rules, publicly announcing that you are working with a digital asset like XRP could create unnecessary legal risk, and large corporations simply don't operate that way. Think about it from the perspective of a major financial institution. If you are a global bank, your responsibility is to protect investors, shareholders, and your reputation. If you openly announce that you are integrating cryptocurrency technology while regulators are still debating whether that technology might fall under securities law, you could expose yourself to lawsuits, regulatory scrutiny, or investor panic. Even if the technology itself is strong, the lack of legal clarity becomes a serious problem. That is why many companies chose to experiment quietly instead of publicly announcing what they were doing. This is something that has been confirmed multiple times by people close to the Ripple ecosystem. A number of institutions have reportedly told Ripple that they are interested in working together, testing products, and building infrastructure using the XRP ledger. But they also made it clear that they could not allow those relationships to be publicly announced until the regulatory environment became more stable. In other words, a lot of work has already been happening behind closed doors, but the market has not been able to see it yet. Now imagine what changes once the Clarity Bill becomes law. The biggest shift is psychological as well as regulatory. Suddenly, the risk of publicly discussing blockchain partnerships becomes much smaller. Instead of worrying about regulators questioning why they are involved with crypto, companies can actually present those partnerships as proof that they are innovating and staying ahead of technological change. In a world where financial services are becoming faster, more digital, and increasingly automated, banks and payment providers want to show investors that they are adapting. This is especially true as technologies like artificial intelligence, real-time data processing, and automated financial services continue to grow. The financial industry is moving toward a future where payments, settlements, and asset transfers happen instantly across the globe. Blockchain technology fits perfectly into that vision because it allows value to move just as quickly as information. If institutions want to remain competitive, they need to show that they are embracing tools that make financial systems faster and more efficient. Once regulatory clarity exists, the narrative around blockchain could shift from something risky to something innovative. Instead of quietly testing technology in the background, companies may begin publicly announcing new products, payment systems, and partnerships built on blockchain infrastructure. And if XRP is involved in those systems, that is when the broader market may finally start recognizing the scale of what has been developing over the last decade. For example, there have already been documents, pilot programs, and technical experiments connecting Ripple's technology to major financial institutions. Names like large international banks, payment processors, and global financial organizations have appeared in different reports and development projects over the years. But because these were often small-scale pilots or technical collaborations, they never received the kind of attention that full public partnerships would receive. When regulatory clarity arrives, those experiments could evolve into official products and services. A bank that previously ran a quiet pilot program might suddenly announce that it is launching a blockchain-powered cross-border payment system. A financial institution that tested XRP liquidity solutions internally might reveal that it plans to expand those services globally. Each of these announcements would act like a signal to the market that real adoption is happening. This is where the psychology of the market becomes extremely important. Right now, a large portion of investors outside the XRP community believe that blockchain adoption by banks is unlikely or exaggerated. Many people assume that cryptocurrencies will remain mostly speculative trading assets used by retail investors. They believe banks will simply continue using traditional systems, or maybe experiment with private blockchain networks without involving public digital assets. If the market suddenly starts seeing credible announcements from major institutions confirming real-world use of XRP-based infrastructure, that perception could change very quickly. Investors who previously ignored XRP might begin reconsidering their position. Institutions that were waiting on the sidelines might start exploring exposure to digital assets connected to real financial use cases. This shift in perception can be incredibly powerful because markets often move based on narrative as much as fundamentals. The most important thing to remember is that adoption in finance usually happens step by step. First, there are small pilot programs, then internal testing expands. After that, official partnerships are announced. Eventually, products launch at scale. Each stage increases confidence and visibility. If XRP becomes associated with real financial infrastructure used by global institutions, the market may begin valuing it very differently than a typical cryptocurrency. So, when we talk about the Clarity Bill, we are not just talking about a piece of legislation. We are talking about the removal of the biggest barrier preventing companies from publicly confirming what they have already been building. Once that barrier disappears, the industry could start revealing developments that have been quietly progressing for years. And if those revelations begin to stack up over time, the impact on market perception and long-term valuation could be far larger than most people currently expect, not just for XRP, but for the entire digital asset industry. Right now, the market is still operating in a strange environment where innovation is moving very fast, but regulation has been moving very slowly. This has created a situation where many companies are building powerful technology but are hesitant to fully commit publicly because they don't want to expose themselves to unnecessary legal uncertainty. The Clarity Bill has the potential to remove that uncertainty and allow the industry to move forward with confidence. If we think about how major technological shifts usually unfold, they rarely happen overnight. Instead, they occur in waves. First, there is experimentation where companies test new ideas and see what works. Then, there is early adoption, where a small number of organizations begin using the technology in limited ways. Finally, once the technology proves its value and regulations catch up, mass adoption begins. In many ways, XRP and Ripple appear to be positioned right between the experimentation phase and the early adoption phase. The infrastructure has been built, the partnerships have been explored, and the technology has been tested. What has been missing is a regulatory environment that allows these systems to be rolled out publicly and at scale. This is why the Clarity Bill could become such an important catalyst. Once financial institutions feel comfortable that the rules are clear, they can start making long-term strategic decisions. Banks may begin integrating blockchain-based settlement systems into their existing payment networks. International payment providers might start using digital asset liquidity solutions to reduce costs and speed up cross-border transfers. Financial technology companies could build new products on top of blockchain infrastructure that previously seemed too risky from a compliance standpoint. When these types of developments start happening, the market narrative around cryptocurrencies begins to evolve. Instead of focusing primarily on speculation and trading, the conversation shifts toward real-world financial utility. Investors begin asking different questions. Instead of wondering which token will pump next, they start asking which networks are actually being used to move value across the global financial system. Assets connected to real economic activity tend to attract a different type of investor, including institutions that prefer long-term infrastructure plays rather than short-term speculation. For XRP specifically, the shift could be extremely important because Ripple's strategy has always focused on solving real financial problems, particularly in the area of cross-border payments and liquidity management. Traditional international payments are still surprisingly slow and expensive, often taking several days to settle and involving multiple intermediaries. Blockchain-based solutions have the potential to make those transactions nearly instant, while reducing costs significantly if financial institutions begin adopting these solutions at scale. The demand for the underlying infrastructure could grow dramatically. Another key factor to consider is credibility. In the financial world, credibility is everything. When a small startup announces a new technology, the market may view it as interesting but uncertain. But when major global financial institutions publicly confirm that they are using a specific technology or digital asset, the perception changes immediately. Large banks and financial companies have strict internal review processes, and they rarely attach their names to projects unless they believe those projects are reliable and strategically important. So imagine the impact if several well-known financial institutions begin announcing blockchain-based payment systems, liquidity solutions, or settlement networks that involve Ripple technology or the XRP ledger. Each announcement would act as validation that the technology has moved beyond experimentation and into real-world implementation. That kind of credibility can attract both institutional investors and large-scale users who were previously hesitant to enter the crypto market. It is also important to remember that global financial systems are incredibly large. Even small improvements in efficiency can represent billions of dollars in value. If blockchain technology can reduce settlement times, lower transaction fees, and improve transparency, financial institutions have strong incentives to adopt it. The Clarity Bill could simply be the signal that tells them the environment is finally safe enough to move forward publicly. Of course, none of this means the market will change instantly. As we discussed earlier, institutions move carefully. They review new opportunities, evaluate risks, and gradually implement new systems. But once that process begins, momentum can build quickly. One successful implementation encourages others to follow. Competitors don't want to fall behind, so they begin exploring similar technologies. Over time, what started as a cautious experiment can turn into a widespread industry trend. From an investor's perspective, this is why patience and perspective are so important. The Clarity Bill is not necessarily about a single day where the price suddenly explodes. Instead, it represents the starting point of a new phase where blockchain technology, including networks like the XRP ledger, can finally be integrated into traditional financial infrastructure without constant legal uncertainty. If that process unfolds the way many analysts expect, the next few years could reveal developments that most of the market has not fully anticipated yet. Partnerships that were previously hidden could become public. Products that were only tested internally could launch globally. And the narrative around cryptocurrencies could shift from speculation toward real financial utility. If that happens, assets connected to real-world adoption may begin to stand out in a way that fundamentally reshapes how the market values